I've been noticing that capital markets have been slowing down in a very dramatic fashion. We've seen certainly financial market conditions tighten, but you can see in the IPO market, which is just a fraction of what it was last year. You can see it in the high yield debt market, just a fraction of what was last year. How much is that going to pose some sort of credit issue that does get the attention of the broader market in a new way? How much do you see signs of that being a risk?
So you're obviously seeing slowdown capital market activity, but we're not yet seeing any elevated signs of credit risk that would suggest a problem there. So I think I'd want to distinguish the activity from the actual credit risk. Obviously, if if the economy does slow sharper than expected, then we have to revisit that conclusion. But right now it looks. I don't know, I'd say flashing yellow.
So given the sense that people think that the credit markets will hold in, and they have held in despite some of the tightening because a lot of companies have extended the maturities, does that mean you could see much worse financial markets performance than the underlying economy? Because the Fed tightening is aiming for reducing some of the froth from that market, but that it might not trickle into the real economy so quickly based on how much of the financing has already been held in place, and based on the fact that a lot of people are removed from that activity in some sort of direct way?
So look, I think we got to keep in mind that there are several channels of monetary policy transmission, and I think in each cycle, some are more potent than others. I think we've already talked about one, which is the dollar, which I think will be feeding through into the real economy. I think we're starting to see that also feed through into weaker import prices. I think we're seeing the mortgage rate effect already having a pretty pronounced effect on housing activity. So we got to keep in mind it's not just one channel through which monetary policy operates. I do think we're seeing, and of course some of the wealth effect too, since the beginning of the year. So I do think that there are definitely real channels that are still operating, and I think you're starting to see I guess call it the fruits of that in slower economic activity.